Michael Carnevale is branch manager and financial advisor. Securities offered through Raymond James Financial Services Incorporated, 400 Southbridge Street in Auburn, Massachusetts, 1-800-657-9126. A member of FINRA SIPC and are not deposits, not insured by FDIC or any governmental agency, not guaranteed by Webster 5 Cent Savings Bank, and subject to risk, may lose value. Webster 5 Cent Savings Bank is not affiliated with Raymond James Financial Services Incorporated. The information contained in this report does not purport to be a complete description of the securities markets or developments referred to in the material. The information has been obtained from sources considered to be reliable, but we do not guarantee that the foregoing material is accurate or complete. Any information is not a complete summary or statement of all available data necessary for making an investment decision and does not constitute a recommendation. Any opinions are those of Michael Carnevale and not necessarily those of RJFS or Raymond James. Expressions of opinion are as of this date and are subject to change without notice.
Good afternoon, ladies and gentlemen. This is Richard Morco. With me, as usual, is Mike Carnevale, Conversations With, and he's going to tell us what happened in the economy in this new world with Donald Trump and the new guard coming in. Michael?
Yes.
Do you have anything to say? No, no.
No, I don't think I do.
Thank you for watching. No, okay. All right, January. How did they?
Was it
now that we're way into February.
We're way into February. But January was a very good month. Of course, it comes off a not so great December. But, historically, January is sort of in the middle of the road, so not much happens. But this January, it was, Dow was up almost 5%, which is good because there's a Wall Street saying, investment world is full of these sayings. But for January, they call it the January barometer, and supposedly as January goes, so goes the year. And that worked out well in 2024 when January is up, and of course we know what happened in 2024. It was a great year. January 2025 was even better. The Dow was up 4.7%, so that puts us off to a good start. No all-time records in January because we were coming off, if you recall, a 4% plus loss in December. So kind of making
we had somewhere to go up.
Correct.
Okay.
Correct.
All right.
Interest rates fell a bit. Yield curve positive, which is a good sign.
Finally.
And so now we're into February, which February historically is worse than January. So maybe it won't be up 4.7, but hopefully it'll be up.
Well, how did February do last year? Do you remember? Or is the memory bank?
The memory.
my memory bank's gone.
My February memory will come back probably next month.
Remember your name. That's what I want to.
I'd have to disrobe to see it, but it's written on my
Your mom sewed that
sewed it in. Yes.
Ryan did too before I went to camp. I did outgrow all those clothes.
Okay. Yeah. Okay. I
Okay.
think it begins with an M, but I'm not 100% sure.
Well, we're not telling you till the show's over.
Right.
And we give you back your license.
Yes.
All right. So, in the treasuries, yield, everything's good there.
Yeah, it seems to be going in nothing out of the ordinary.
Technicals, you're saying they're weakening.
Yep. And that's usually what happens after you get a big rally in a short period of time. And obviously, 5% gain in a month is considered a big rally. So the technical indicators weakened, but they were coming off some really low numbers in December. So the short-term sentiment really hasn't changed. It's just getting closer and closer to changing. But we had a lot to make up in December. And
if we have a very good February,
then it could.
Then they will really weaken.
Then they'll really weaken, and then you could see a short-term top or something.
Now, the stochastic oscillator, which I had one implanted.
You had it implanted?
Yeah.
They're good for a while. You won't have to have one again for a very long time.
I believe it's a 10-year battery.
Okay. All right.
All right. If you want to explain that to the populace.
Well, that just talks about that indicator is one of the many indicators that are out there that people follow. It kind of gives you an indication of where stocks are today in comparison to their high point and their low point. So the lower the number, obviously, the better. December ended, the number was at between 0 and 100. Number ended December at 51, which was really low. We had a big rally, so you'd expect that number to go up, and it did, up to 73. But it doesn't really get into like a warning signal historically until it gets over 80. So again, that's an indication that although the technical indicator weakened, the short-term sentiment hasn't changed.
So any movement, we're waiting for how February does.
Right,
Okay.
something in February.
Fear and greed index, which
Yeah, that's one of the indexes that is a compilation of a lot of indexes that CNN, I think, produces that one. So, and that just kind of, all the other indicators that you look at are on their own, and then there's a bunch of indicators that, you know, for some reason get lumped together, and that's this one, fear and greed. You want to see a low number there. The high number means there's not so much, there's greed, and usually when people get greedy when things are going really good. So you want to see a low number there. A month ago, it was at 34. You'd expect it to be low, that there was a lot of fear when the market was really down. Today it's at 47, but it's still in that 25 to 48 category, which is considered the fear category. So although as I said, the technical indicators weakened, the sentiment didn't really change because sentiment was really at the low end of the scale after December.
so and then January turned it around.
Saw allowed for a lot of recovery and not really change sentiment.
Okay. All right, the Fed is in the news. What are they going to do with Trump and blah, blah, blah. So they had a meeting, and they voted no cut due to inflation in January.
Right.
Okay, the March meeting odds at 82% chance of no cut.
Right.
Have they, February, they're not going to do anything in February?
They don't meet in February.
They don't meet
So the Fed meets every 6 weeks.
What are they done in Florida or something?
Nope, they just meet every 6 weeks. So it's something toward the end of March.
Okay. And chance of no change, no change, no
cut or hike.
Why? No change. I mean, there's the original Powell was originally appointed by Trump, wasn't
Right.
he? Okay. He's never seemed a Trump loyalist, though.
No.
So raising or lowering or no cut, what does that mean as relates to his attitude toward the administration and what they're doing a lot in the economy?
Right.
So
Right.
just he doesn't know.
Well, Powell's term is up in 2026.
Yeah.
There's probably no chance that Trump will reappoint him.
Do you think he really wants to be reappointed?
Uh,
Don't you think it's kind of a burnout job?
I don't know. I think it's a pretty good job. I mean,
Oh, I didn't say it's not a burnout. I mean, there's a lot of weight on your shoulders.
it is, but I suspect
He like it.
he would stay. But, you know, inflation has been coming up. We saw some numbers for January this week that showed the rate is increasing again. That, coupled with all this talk about potential tariffs, would likely cause prices to go up again. So I think that's why the Fed is saying that they don't see, you know, a need to cut rates. Okay. And, you know, it all depends on what happens with these tariffs. I mean, there may be even a case where they start to raise rates again if inflation really starts to take off again. I see the tariff thing, I think, is a dangerous thing because 100% of the cost is going to be passed on to, you know, the consumer.
Well,
Sounds good in theory, but
well,
doesn't work.
well, you know, in the up until the Civil War, that's how that tariffs paid for the government.
Right.
We didn't have taxes.
Right.
The South was paying it too. It wasn't the North. The North wanted the tariffs for protection. The South felt they were being screwed by that because they imported, they didn't want to import expensive northern manufactured goods. So the situation now is we've got a lot of jobs overseas. Can the tariffs bring them back? Well, I mean, I live by a street where about 20 years ago there were a lot of jobs, a lot of factories. Only one factory left. It's a defense contractor. Can he bring jobs? Really bring jobs back? And is that what he's trying to do? And having jobs where a man or a woman can go work 8 hours and raise a family, that'd be lovely. Can it happen? So that's how much of that is the reason for for raising tariffs? What do you think or is it just we fear China? We fear China.
Yeah, I think it's we fear China.
How about with Mexico and
Yeah,
Canada?
same thing. I mean, I think, everyone's got their own opinion and whatnot, but I think generally tariffs will definitely cause prices to increase, and that alone that's what leads to inflation. So not a good thing.
We do disagree a little on the inflation. I'd see it as a supply and demand, not necessarily inflation. Your driving price, you say, okay, you want to have that Chinese EV. We'll make you pay more for it, so you'll buy an American EV, which is X number of dollars more, but we could hire, last month we were able to hire a lot more Americans at what do you call it? What's the union for the cars? UAW.
UAW.
At UAW, what UAW prices, wages. How do you get there? Do I think, it's a really bright idea? I'm not that smart. But what do you do? Well, Trump had to say, I'm the American workers' guy. The Democrats really weren't.
Right. But it sounds good. But
does anybody say anything purposely to sound bad?
No. Nobody has said that for a very long time.
Yeah.
It's just part of the problem.
I'm announcing right now, my 2028 run for the presidency, and my campaign slogan is "Let's raise taxes." How do you think that's going to play?
Nope, would not go. Would not go over.
Thanks, Mike. I'm glad now I can just
worry about the other campaign issues.
Yeah.
Yeah. Nope. And that's kind of part of the problem, really, right? In other words, usually there's solutions to all problems. It's the solution that nobody wants. I mean, you had your physical, geez, you could lose 20 pounds. This is how you do it. Everybody knows how to do it, and you don't want to do it, right?
The novelist Philip K. Dick, did a lot of sci-fi stuff that was big, The Matrix, things like that. He was a original writer about that. Said, reality is that which does not go away once you stop believing it. Who disagrees with that?
Right.
The English poet, and I'm probably going to quote this many times, but it's an American poet who lived in England, T.S. Eliot. in his poem, Norton said, humankind cannot stand much reality. And that's true. That's why,
Yeah.
so that's why the really important, the really intelligent slogan for my presidential run of let's raise taxes is the right one, but my constituents can't deal with reality.
No, would not be able to.
No, they can't handle it.
No, because somebody's going to tell them, what you can get without any suffering.
Yeah. Yeah, I'm looking for, I'm going to start selling miracle drugs.
Okay.
There'll be placebos, but people won't know.
No, they won't know.
Yeah.
Yeah.
Okay, so at the March meeting, 82% chance of no cut. How do they come to that 82%?
Well, it's based on the pricing of Fed funds futures.
Say that 3 times fast.
It's the pricing of Fed funds futures the current month and the month right after the next Fed meeting. So you get the 82% by taking a look at what the pricing is right now and what the pricing is for the bond after the March meeting. So you're looking at the April price versus the price today, divided by what the Fed normally increases or decreases rates by, which is 1/4 point. And that's how you get the percentage.
Ladies and gentlemen, what Mike just told you is they make a guess using scientific method.
No, it's an actual formula.
But it's still a guess. I mean, how many times are they exactly right?
Well, I mean, I think they're more often right than wrong on the
Okay.
odds.
Oh, okay. So
Yeah.
it's kind of good.
It is. Again,
That's why I'm saying it's a guess on scientific
yeah,
method.
everything that has to do with any of these numbers is not the number itself, but comparing the number to a number at a prior time period. So if the odds are 82% of no change today, and 2 weeks ago it was a 100% chance, well, that tells you they may be thinking about raising rates. And there is some talk that, if all this tariff stuff does go in, that you may be closer to another rate hike than a lot of people think.
And then that's all out the window.
Right.
Okay.
Right.
Okay, we got it. 4 central banks cut.
Cut rates. Yep.
I was really wondering about what Pearl was going to do.
Oh, they did cut.
Yeah, okay.
Yeah. See, I was focusing more on Sweden, but that's okay.
Yeah,
They also cut. Japan was the only one who really raised rates.
raised. And we're not hearing from the Turks anymore?
No, absolutely nothing.
I did see something on, it wasn't about the economy itself, it was something in one of their provinces. They were going to pay somebody to do something or not do something. And it's something like, we'd give you $100 in this country, but it was something like several thousand lira.
Oh, right, okay.
Yeah. So, they got to come back. They got to make work on this.
Yep.
All right. Oil. Actually, right now, today, it's in the very low 70s, but it stayed in the mid-70s in
For a while.
January,
Yep.
Production fell 400 million barrels per day. That's partially because I stopped taking trips.
Okay.
From a record of 13.6 million. Drilling rigs down to 583 versus 619 a year ago.
Right.
So, what are any predictions about oil? Are we going to see some? Are we going to see it go down?
It's been in the 70s for a really long time, and production is at near record levels. So it's hard to see how oil prices are really going to go up. At least in the short term, unless there was some external event that happens around the world. But we're producing so much oil now. It's hard to see how it's going to go up. Hard to see how it's going to get out of the 70s.
Well, now that we're making peace with Russia, we can buy oil from them too.
That's true.
Okay.
Growth rate is, we got a report from the International Monetary Fund last month. They actually increased their global economic growth rate for this year, which is good, and they hinted that the main reason is because of the U.S. So,
Are growing.
yeah.
Are they saying, boy, it was a great Biden administration?
Well, you know, if you look at the economic numbers, it was a good administration. But again, you know, sometimes people look at the numbers and then they look at the person and they don't like the person. So they, you know, I mean, it was. I mean, we had a lot of job creation. The rate of inflation fell.
How
The
good were
stock
the-
market did good.
How good were those jobs, and how many went to native-born Americans versus non-native born?
Well, yeah, but I mean,
it's
that's-
good. You're saying it's good for Wall Street, or are you good for the common man?
oh, we're only talking about
Wall Street.
Wall Street.
Yeah. Okay.
There are, you have other programs that talk about this is solely, strictly how it affects
Wall Street.
Wall Street.
So is a good year for the fat cats.
It was a good 4 years. You know, people. You know, you look back and you heard all the, the name calling and whatnot. The fact of the matter was, during the Biden years, the stock market had an average annual return of 9%. If 4 years ago, somebody said to you, I'm going to give you 9% a year for the next 4 years, you would be ecstatic.
How many people got that, really?
Only the people who were investing.
Yes.
Correct.
It was not necessarily good for the people, the average person.
Again, that's a different story. In
Oh,
other
yeah,
words,
yeah.
we're-
So,
we're-
but you have to be somewhat granular. You have to state your terms. Who did well? Who did not do well?
correct.
And I'm happy for you.
But
You're closer to upstate Western New York.
yes, yeah. But so and you compared that to the Trump 1 year, first term,
4 years.
or Trump 1 as they call it, right? That had an average return of 11% a year. So there isn't much difference between the two.
There. Okay.
Yet if you ask somebody just on the street, they're going to tell you a different story.
Well, yeah, of course, because they're real people.
Right. But I mean,
Like me.
well, that's the whole, and again, that ties back to the whole thing is you have to be invested for the long term and not focusing on,
And I fully agree. with
I
that.
mean-
I fully agree with that. But, your average guy comes in, and he's been invested with you. I know our late friend, Mr. Vaughn.
Yeah.
Yeah. And he thought you were a god. I mean, he thought you were kind of, had quite a bit of wisdom. And I would have no problem sending somebody to you. I think you know what's going on in the market. But the population at large has real problems.
oh, yeah, no doubt about it. No doubt about it. But still, it's all about choices, right? In other words, I think there's a small segment that doesn't have the opportunities, but there's a big segment who have the opportunities but have not taken advantage of them.
Well,
And then there's a smaller group that has the opportunity and has taken advantage fully of it. But yeah, I mean, I would say the bulk of the people have the opportunity, but have not taken advantage of it.
And
I think that's for a lot of reasons,
it is, yeah.
you know,
But
for
to
that.
them, a good economy might mean a real good day's wage.
Correct,
And if they don't have that,
Correct.
eventually the thing gets gummed up.
correct.
We got to move along because we got the important sports stuff to do too.
We do.
Inflation up in December. Well, that puts a wrench into something.
Yep, and a hint, the January numbers came out today and they're up again.
Yep. So that's a wrench in the machinery.
That is,
Yeah.
it could potentially derail any type of good year that we're hoping for.
Okay. Core, less food and energy. The one the Fed looks up was up 0.2%.
Yeah, it was up, and it was up 0.4% today, so it's going in the wrong
Ooh,
direction.
That is bad, yeah. Okay. So inflation just keeps inflating.
Yep, the rate keeps going up. Yep.
Well, that's what I was
Oh,
kind
yeah,
of.
yeah.
I mean, just
Which is
because you can't let me
negative.
say anything poetic, you know.
Yeah, I hear you. I hear you.
All right, leading in economic indicators.
Yeah, they went down again. There was a gain in the prior month and was at the start of a trend. Nope, down again in December. So that's a negative, something to watch out for again. You know, are things slowing down again? You know, 1 month doesn't make it, but if it continues, you got a couple of things going in the wrong direction right now.
Well, you know, you've heard that. I mean, if people go on. I want, you hear people talk about the Chinese saying, "May live in interesting times," meaning interesting times are not good times. So let's hope that even though you might not love Trump and he's the hired guy. Right now he's actually a lame duck.
Right.
Let's hope he does something right.
Oh yeah. You know, I mean, that's our only hope, right? That the person in power and the administration that's running the show does get something done.
Now, I glossed over this, and I didn't really like it. The Madoff scam.
Yeah, that finally came to an end.
And 94% of the funds were recovered.
Yep.
Why didn't I invest with Madoff?
Well, that means you lost 6%.
Well, you know, it's not everybody lost. Probably some people did well.
Well, it depends on how
Yeah,
you get
I
in and
know.
out,
But I mean,
and it took a long time to get that 94%.
and you know Sam Bankman-Fried?
Yeah.
People have got that money back too.
Yeah.
I mean, so I'm not saying invest in scams, but in fact, people made money on Sam Bankman-Fried, I've heard.
Yeah, there were people who made money in the Madoff.
I mean, yeah.
It was all
If
depends
you
on
had taken it all out the week before he went to, he got caught.
Yeah.
You'd have done. People did make.
Yeah.
It was.
And that's a story that, to this day, I'll never understand.
Madoff.
Yeah, I don't know how.
He had a great line.
I don't know.
He had been successful. Didn't he invent something? Was he one of the people who came up with NASDAQ or something?
Well, he served on the board.
Okay.
I think at one time.
He wasn't an idiot. I mean, but he was evil. He probably thought he was good.
But what the regulators and the auditors do to us, who are minuscule compared to him,
Where did he die?
in prison.
Yeah, okay,
Yes.
I've said enough. Huh?
Yeah.
All right, jobless claims.
Boy, they continue to, be below the level that could hurt the economy, which is 250,000 layoffs.
Employment record. What?
Employment, 48 straight months of job creation. December was very good, 256,000. So
Real good job. We don't know. We're not getting that granular.
still healthcare, retail, leisure, hospitality were the ones that gained the most. But, the economy is now service related. It has been for a long time. It hasn't been manufacturing. Manufacturing did lose jobs again in December. It's just the way things are.
We can discuss at another time national survival when we don't make anything.
Right.
That's not for now. All right, now in sports, we just had a Super Bowl.
We did.
And the last time the Eagles were they in or won the Super Bowl?
Won.
Was 2018. Starks had the worst year since 2008.
Yep.
So Michael, who does this all scientifically here, or not, the Eagles won this year, and so we have, 10 more months, and that means if it is scientifically is true, we're going to have a terrible year.
Well,
Stocks-wise.
according to the figures, when a team from Philadelphia wins either the World Series or the Super Bowl, and this goes back to their first World Series win in 1910, every time has been a bad time for the market. So how many times is that? I have to count. 8 times. Every single time the market has done poorly. This is the 9th time. We'll see if we can stick around till December 31st, and we'll see if the record can be broken.
You keep watching there, guy.
We will.
What was the guy who said he was an actor, funny comic actor in the 20s and 30s, I think, or 30s and 40s. He said something about I'd rather be
W.C. Field?
W.C. Fields about being dead or
Yes.
in Philly.
He'd rather be dead than in Philadelphia.
Actually, I have some wonderful relatives in Philadelphia, and they love the place. And they were ecstatic the other day.
Yep. Now, the city's not great, but the suburbs are nice.
They live in the city and they love it.
Okay. Yeah.
And okay, so this is you're of course the convinced Western New York guy. You're never moving to Philly,
Correct. No, never.
and they're not going to allow you to come anyway.
That's true. That's true.
All right, ladies and gentlemen, I want to thank you and Michael. Well, I think he wants to thank you too. And we will see Mike next month, and we hope to see you. It's been Conversations with. This is Richard Morco.